Hello, fellow traders. 'Tis I, the Rumpled One. It is Sunday, March the 11th, the year 2018. Let's talk trading. Weekly open and gap. Here we go, starting the week off. Let's start it off right by focusing on money and risk management. And as we can see, we've got some gaps that have already filled, and we're about an hour and 38 minutes into the session. And you can see here there's some very tiny gaps left to fill. Really not much action. Maybe you can pick off 4 pips on the euro. But we can see here last week we had this red candle pushing down. So what will happen here? Does it break the low and continue down? Or do you think it's going to find a support area and come back up, maybe testing that high again? Remembering, price doesn't like to stay in the wick zone. Doesn't matter what the time frame is. Okay, let's look at the daily. You can see here we got a little green candle poking up. Not much of one. We haven't had much range. But you can see where you can place your bets. Where you can take entries here. And you can see here the buy zone. We haven't even hit the buy zone yet. So pretty much you just have to wait, stand aside. And trading is waiting. And as you can see, there's no rat zone to speak of. Now, let's look at the pivots. Let's see, let's bring it down maybe to M15. We can get a little more of the descriptors on the lines here. There's the pivot. There's the open. You want to trade long. There's the monthly open. That would be a nice strong cross if we cross that monthly open. There's the weekly pivot. So you can see here, if we can get past that monthly open, we might be back up into this area here. That's something to think about. Price action. There's your 3 ball at the bottom. We got a green candle. We're coming to the line. Might want to think about going long. And looking at the 5 lines while we crossed above the previous session's low, the previous session's close, looking at the mid, the previous session's open and high. So let's see what happens. Might stall somewhere around this area. And the wick zone. Here we go. As you can see, price is leaving that lower wick zone. And looking at the holo setup, not much happening yet. We don't have any range really. So there's really no setup here. And just looking at the price action on the tick chart, I haven't had the screen open that long, so you can see, and it's Sunday, there's really not much happening at the moment during the New Zealand Australian session. Candle colors are telling you which way to go here. It looks like we want to go long. And so just a heads up, you see right here, we've got peaks and valleys. So this is the lowest right here. You can see it's coming down. We need to get the bid above the green or the ask below the red before you have a direction. So right here, you can see here, we've got selling going on. And that's about it. I'm trying to remember some of the questions from the past video. I think people are really trying to figure out when to take profit. I would suggest you revisit my exit playbook videos. You see, you have to have a plan A, a plan B. You know, sometimes price is moving really fast, so you'll have one set of strategies or one strategy for that. And then sometimes price is moving slow, and you'll have another strategy. And then maybe there might be during news events, you have a whole third strategy. And then I also think somebody asked about you know, green rats, red rats. Do you trade both ways? Do you trade one way? Once again, I think it was in reference to price action. Rats trade at the extreme, at the daily, you know, the current daily high, current daily low. That's where rats look to reverse. And that's the only trade for rats. Everything else is something, has nothing to do with the rat reversals, the rat zone. Okay, so if you're trading just pure price action, sure, you can trade one way and trade the other. However, if you get into a rat zone, I would caution you to look to trade the reversal. You know, that being said, if you're near the previous day's high, you might want to keep going long on the breakout. So, but you have to pick this ahead of time. You don't want to do it, make these decisions seat of the pants. You should be able to look at the chart and go, okay, here's areas where I want to go long. Here's areas where I want to go short. You just don't want to be airballing trades. Just trading from the seat of your pants. No, you want to have a defined trigger, defined entry, and a defined exit, especially that stop loss. You know, because once again, there's people saying, well, if you're taking 2 or 3 pips and then you take that 10 pip, you've got to, you know, that wipes out all the profit, blah, blah, blah. Well, number one, it only wipes out all the profit if you let it wipe out all the profit. I mean, if say you're up 5 pips for the day, you get in a trade and it goes up and then it starts coming down. Do you scratch the trade at break even or break even plus 1? Do you let it go against you a couple of pips and then scratch the trade? Do you let it go against you 5 pips, scratch the trade, now you're back to even for the day? Or do you let it go to the 10 pips stop and actually put you down 5 pips for the day? You see, that's up to you. That's up to your trading plan. I can't tell you what to do. Nobody can. You have to decide for yourself when to take profit and when not to. You know, if you believe in your system and your system says, hey, you know, you give it 10 pip wiggle room and sometimes you'll guess wrong, because what's the worst thing that can happen? It goes to 9 pips minus, turns around and rockets 100 pips the other way. Then you'd be kicking yourself and you might be mad at me. But no, you can't be mad at me because I didn't click your mouse for you. You did. So the thing is, either you stick with your plan or you start to second guess it. And that's when you get into trouble. So if your plan is to let that trade ride for 10 pips, that's okay. If your trade plan is to manage that profit and don't give it back, or you don't go into the hole, then you take those exits. See, it's all up to you. I mean, trading's all up to you. And so, it's real simple. You can either trade your plan, or you can follow somebody else. Which do you prefer? Do you want somebody telling you what to do, Or you just doing what they do, copycat? Now, if they're profitable, you might say, yeah, I want to copycat the trade. Who wouldn't? But the thing is, what happens when they go away? Have you learned anything? See, you have to be able to take the reins of your trading account for yourself. I hate it when it does that. Oh, by the way, for those wondering, I bought a new PC. I got a Dell. It was an i3, and I'm very disappointed. In fact, I've already called them up and said, send me a new machine. This thing was running slower than molasses. I'm so disappointed. I thought it would be about twice as fast as this Gateway, my backup piece of crap computer. But it's not even performing up to that. And it came with Windows 10. The Gateway has, I think, Windows 8 on it. So I don't know if 10 is just that much more of a hog or not. I haven't really gotten into 10, so I don't know. And this Window Edge thing, why do they keep making things so hard? I mean, you have to dig through it to find, to change things like your start page. But anyway, that has nothing to do with trading. But just so you know, I did get another computer. So hopefully I'll have the Pal Talk room back up. But they're supposedly going to send me another machine. I really believe this one's a lemon. And so hopefully by the end of the week, I'll have a new one. But I decided just to go ahead and get something, I guess mid to low end. Rather than try and buy something with a solid state drive closer to state of the art, because probably in 6 months it's going to be obsoleted anyway. So I don't really need it for what I'm doing. But I do like the Dell. I like the keyboard, just about everything about it from that standpoint. But the performance is just awful. Anyway, enough on the computers. Back to trading. As you can see here, it just seems really quiet today, nothing happening. So remember, basically, you got to follow your own plan. You got to trade the way you trade. I mean, you can pick up tips and follow other plans. Like if you want to trade the rat zone or the buy zone or the holo zone or the wick zone that I've come up with, sure, go ahead. Trade the weekly open or daily open, monthly open crossovers or midpoint crossovers. Fine, or pure price action, good. But pick it, make sure you don't second guess it, and just take every trade signal you get that fits your plan. And then, like I think I said in the previous video, stick with it for 100 trades. And then at the end of 100 trades, like I said, basically risk $1 a trade and see if the plan works or not. But remember, you have to make sure you execute each trade according to plan flawlessly. Not late, not early, but right on time at the price point with the right position size and the appropriate stop loss. You do that, and then you can say, yeah, I did 100 trades and here's my results. Because, remember, fellow traders, it's not what you trade. It's how you trade it. TheRumpledOne signing off to go drain the banks.